Good morning and welcome to the Energy Perspectives Group webinar hosted by Nouveau Monde Graphite. This event will be recorded. During the presentation, all participants will be muted. If you have any questions you would like to ask, please type them into the chat feature. We will read and answer questions at the end of the presentation. Thank you so much for joining us today. Now here's Dan Steffens, who will introduce today's speaker.
Good morning, everybody, and thank you for tuning into this webinar. Our speaker today is Eric Desailly. He is the founder, president, and chief executive officer of Nouveau Monde Graphite, one of my top picks for those of you wanting to invest in green energy. This is the third webinar that they've hosted for us. Eric is a professional geologist with a specialization in geophysics and integrated 3D Earth modeling. I have been following his company for over 3 years, and his team has made a lot of progress during that time. 6 years ago, Eric's team discovered a world-class graphite resource in Quebec that he's going to discuss today. It has the potential to become the largest graphite mine in North America. In the EIA's new 2021 International Energy Outlook to 2050, they estimate that global demand for energy will increase by 50% over the next 30 years. To meet that demand, we must have an all of the above energy policy. It's no way can like renewables totally replace oil and gas. And we must improve power storage technology. No matter how you feel about the Green New Deal, we must find new energy sources. Per EIA, 30 years from now, oil and natural gas will still supply about 50% of the world's energy, although the percentage of total energy from oil and gas will decline from 57% in 2050. Supplies of crude oil will need to increase by 25%. Supplies of crude oil will need to increase by 25%, and supplies of natural gas will need to increase by 30%. The hydrocarbon that's being replaced primarily by wind and solar is coal. The energy supply gap must be filled by something. Today, it seems like wind and solar will fill that gap. Wind and solar produce electricity. For electricity to become a larger share of energy used for transportation, we need a lot more rechargeable batteries. My focus has been to find the undiscovered small caps that are going to produce the minerals needed for rechargeable batteries, how to make batteries recharge faster and hold more energy, and also increase the range of electric vehicles. Graphite is an element that is critical to the growing lithium ion and fuel cell markets. Eric's company is developing what should become the largest high-quality graphite mine in North America. I will now turn over the presentation, Eric, and I will return, unmute again for the Q&A session and then read your questions. Please type your questions into the chat box. Okay, Eric, it's all yours.
Thank you very much, Dan, for inviting me. And as I told you before we were online, I promise next time I'll be in Texas live. Now that the Canadians are welcome back in the US, and also that there's large battery maker customer to visit as well. So we'll do 2 rocks in a shot, we say. So great. So Nouveau Monde Graphite, I will do most of the presentation for the people that are new to the story. As Dan mentioned, we've been there already. So we have a lot going on sites. We have 4 working sites as we speak. A lot of things is happening. So this is an update, but also we'll refresh everyone on the story. I'll be making forward-looking statement. So there's some numbers. That's why you see confidential. It's not for distribution. It is meant for discussion, forward-looking statements with qualified investors. So who we are in a nutshell, Nouveau Monde is part of the EV revolution. We are the Western world largest and also very important, the most advanced project to provide a carbon neutral alternative to the currently 100% dominant in our market Chinese supply chain. We are operating in Quebec, Tier 1 operating jurisdiction, having cheap hydroelectricity and in overcapacity as we speak, and green as well. That's how we can achieve low cost operation and low carbon footprint. We have de-risked our development by making significant demonstration scale operations, and we are operating and producing graphite since 2018. So it's a very important in an industrial mineral to have such de-risking phase. And we have scale growth. We have a very large resource. We have a 3 phases approach that we'll discuss during the presentation, but we can follow the growth of our battery maker customer. And obviously ESG for us is at the forefront of our development, super important for Nouveau Monde and for our customer and the consumers that are purchasing the EV. So for us, it's making a lot of sense. And we're now over 90 professionals developing that project. So we have the right team to be agile and deploy the project. So yeah, we're part of the clean energy mega trend. But why I'm talking about it here, it's clear. It was clear for us when we started the development of our project that the only way the largest future battery material mine in North America would be financed and desired by the investors, it's because it's a sincere consensus that we need other form of energy. Yes, oil and gas will stay there for a long time again, but we start to phase out. We need to start to find alternative to change the spectrum of all the energy that we are using. So that's why in Nouveau Monde, we have developed our project carbon neutral. What it means, an all electric mine. We've announced, that's a recent update. We've announced finally that Caterpillar is our equipment supplier. They will deploy their first electric fleet on our project 2 hours north of Montreal. Makes a lot of sense for them to deploy their first fleet. So it's the best partner we can have. So in the next 5 years, we do have a precise timeline for every piece of equipment, every energy source as well. Yes, battery powered, but also fuel cell powered. Both are offered by our partner Caterpillar. So a very interesting partnership, but also a lot of other initiative on our ESG profile. It will be published in the next 2 weeks in a full ESG report and a rating with some agencies, but progressive land management, collaboration with the local community, partnership with the local research center, and the way we are managing our tailings. This is important because when the large car maker are doing life cycle analysis on us, they realize that we have 50 times less carbon footprint than our competition in China. So this is important. 3 phases approach. First, de-risking. We spoke about it. In parallel, we work on the execution of our 2 large projects. First, the mine and the concentrator, Matawini, 100,000 tons per annum. That's the vineyards where we do the grapes. And then Bécancour, 45,000 tons per annum of transformed material, anode material. That's where we take the grapes and make the expensive wine, the battery material, to be able to sell directly to battery maker. So that's the phase 2 that will make us the largest project in the Western world, for sure in North America, but also in the Western world. And then we can grow from there, expand our capacities at both the transformation and the mine site. So as I said, from the ground all the way to the battery maker, Matawini project being the mine and the concentrator, the Bécancour, the transformation project, to fully control our cost, our quality, and having security of supply now, it's very important. So this is exactly what the customer desire, a local source of battery material. So few notes on the market, because market, as you know, on every natural resource related are very volatile these days. We are no exception. So basically what we see in the market, I don't want to do it all again. When we started the company, there was only 1 plant that was getting built. It was Tesla and Panasonic in Nevada, only 1 plant that was bigger than 1 gigawatt hour in the world. And now it's over 220 lithium-ion battery plants are getting built. So this is happening. Everyone is asking for all electric cars. And every car maker trying to go as quick as they can to deploy models. And now they will figure out how to do the cells and how the materials to go in the cells will happen. So this is very interesting. The 220 plants that are getting built, 100% of them are using graphite in the anode. So on the cathode side, we see a lot of diversification. So you start to see lithium phosphate. So lithium iron phosphate was kind of the previous technology, but now it's back on track for the cheaper model. We even see in North America, Tesla starting to use the LFP chemistry for their Model 3. They were already in China, but now they're doing it as well in America. And we start to see Volkswagen as well to use LFPs in the future. So that's quite interesting to diversify from nickel and cobalt risk. And also we start to see some sodium ion from CATL in China, but all of them are using graphite in the anode, roughly 1.2 kilogram per kilowatt hour. It is natural and artificial, but it's all graphite. So what we see here, the impact on raw materials for lithium, nickel, cobalt, and graphite in blue is massive. For the upcoming few years, there's a big growth that need to happen. It's not quite possible that the mines are opening as fast as the battery plant. That's an education we need to do as a miners. It takes 8 years to build a mine. It takes only 2 to build a battery plant. So when our customer are asking, okay, can you provide by 2025 this amount? Yes, but we're the only one. I don't know where you will be able, other than China, to pick up your product. So that there's a massive growth that need to happen. Today, graphite is a slightly bigger market than, if you compare with lithium. It's roughly 800,000 tons per annum, and most of the flake graphite that is used today is still going in something else than battery. Today is roughly 22-25% of the graphite is used in the battery. So refractory bricks, foil for iPhones, a lot of other specialty graphite application. And there's both natural and synthetic. Currently, it's about 39% is natural. In the future, they forecast that more natural will be used in battery. They compete. They have both advantage, disadvantage. The biggest advantage of natural is 2 things: is cost is much cheaper. Mother Nature already graphitized the carbon in the ground, so we don't need to invest a lot of energy in it. So cost is much lower, and carbon footprint, it's much lower. We can be carbon neutral. So for synthetic, they need to purchase needle coke, a very specific needle coke that is a residue of the oil and gas industry, and also to transform it, to graphitize it at 3,000 degrees Celsius for many days. So that's quite energy intensive. And in a world where energy is getting more and more expensive, natural graphite makes a lot of sense. So what we see in America, so in the past, all the batteries were made in Asia. It's a new thing that Panasonic is making battery in Nevada. And now in the recent month, even 2 months, 3 months, we saw a lot of announcements from 4 groups in the US primarily. First, Panasonic is now the biggest buyer of graphite with their 50 gigawatt hour plant with Tesla in Nevada. So that's a major customer potential for us. Same with Tesla. Now in Texas, they're making their own plant in Austin, massive plant. They want to do their own cells because they need to help Panasonic to make more cells if they want to sell all the cars they want to sell. And then we start to see GM, General Motor with LG Energy Solution, previously LG Chem, now LG Energy Solution formed Ultium. They have announced 2 massive battery plants. They are now at 80 gigawatt hour of capacity in the US, and they will announce another big plant. And we saw a few weeks ago, Ford and SKI from Korea announced, I think, $11.7 billion investment on 2 massive sites, one in Kentucky, one in Tennessee, to make EV and battery themselves. So all those plants, again, lithium ion chemistry. So it's about like approximately 300,000 tons of graphite anode material needed by 2025. We're the largest, and we're planning to have 42,000 tons per annum available in 2025. So even us being the biggest and the most ready to deploy that, it's 15% maximum of the future demand. So we'll need to start to keep importing material from Asia, but we need to change that idea, So this is super important. And overall in the Western world, it's about 25 to 30% of the current announced capacity for batteries that are located here. there's still a big growth happening in Asia. So they need their material in Asia. So that's something that we need to understand in terms of future policy and politico-economic. The Chinese really need their product if they want to decarbonize their economy, and they don't have much alternative. They don't have much oil and gas internally in China. So they have incentive themselves to deploy those lithium-ion battery. So today, graphite, 2% of the world flakes comes from Canada, but 2/3 of the flakes come from China, but 100% of the transformed materials. So when you need to transform it from flake to coated spherical graphite, we'll talk about that, but that's 100% that comes from China today. I don't know if you follow the logistic costs coming in America. It's just insane. It's now, last time I checked, $30,000 for a container. That's not sustainable, but $20,000 for a container, you can fit 20 tons of product in it. It's roughly $1,000 only for the material. So $1,000 per ton. So that's really for a flake graphite, it's $1,500 per ton, and for transformed material, it's $7,300. So it's still over 10% of the cost is in logistics. So it's a massive advantage to have a local supplier like Nouveau Monde want to be. So all things together, you know, with all the capacity in China and all the demands that will come online in 2024, 2025, it's about the supply deficit will be growing from 2023 onward. So we want to be getting into the market at the right time. So it takes time to build a mine. We needed luck. We need to be well timed with the cycle, and we are, you know, to get into production in a few years' time. It's exactly the right time when the demand will be at the peak, and we'll be there to provide a small solution about it. And just an example, it was last week. Last week prices for lithium carbonate just is spiking. So I don't know where it will end up, but it just, you see September, October, the price is going to the roof. Experts are expecting $40,000 per ton for this lithium carbonate tons. So that's a small market. It's a 100,000 ton market in the world with roughly, give or take, 11% CAGR. So there's a lot of volatility on those newer small market essential material for EV. So will it happen to graphite? As I said, graphite is a slightly bigger market, 800,000 ton per annum. That's the price we saw last August. Everyone is waiting to see September and October. It's all produced in China, 100%, and with all the logistic costs that we see now. So we expect some volatility in graphite to happen in the near future, to follow a little bit what is happening in other battery metals. But still, so far, no one understands why. And if you look back in 2012, graphite prices were 3 times bigger than today. So we follow the same trend. If you look lithium in the since 2018, it was going down, you know, it was going down from a peak in 2016, and now suddenly since 12 months, boom. So imagine all the stocks behind lithium. You probably follow a few of them, and we expect graphite to have, you know, at some point, those are small markets. There's a slight growth, healthy growth in graphite, but we expect some volatility as well in the near future. So what we do about it at Nouveau Monde Graphite, that's where we can do a small update. 2 projects, 2 hours north of Montreal, the mine and the concentrator, the vineyards, and then 2 hours east of our mining project, or an hour, 30 minutes northeast of Montreal in Bécancour. That's where we transform the flake graphite into the battery material. And that's one of the top industrial complex in Canada. Great infrastructure, and we'll talk about it. All using hydroelectricity, controlling our full vertical. So we decided to do 2 phases approach on every project. First, on Matawini project, we are producing flake graphite since 3 years. We've qualified our flakes. We have customers. We're ready to sell the flakes. 60% of our future production, because we don't want to sell the flake in China to be transformed in China. We want to transform it on site. And that's 3 process steps. First of all, you need to shape the graphite, you need to purify the graphite, and you need to coat it afterward. 3 process steps, 3 module that we're deploying as we speak. So shaping, we are making spherical graphite since 18 months already, produce many tons for qualifying with our customer and feed in our detail engineering for the commercial phase 2 project. And now we are commissioning the purification. This is the key process step. That's where we use our hydroelectricity to raise the temperature at high degree, injecting chlorine. And then the last step is the coating. And that's what we are building and will be fully commissioned in Q1 2022. And I have actually live cameras on site. So you see that's the purification furnaces here that we can purify 20 tons basically per week for a 7-day cycle time. So that's live on site at our Bécancour purification plant. So you see, I'm always watching them during COVID. So this is commission, it's happening. For sure, there's always tweaks in the process, but now we can provide not only kilograms to our customer, the battery maker, to qualify our product, but tons. So they can make more cylindrical and pouch cell and fully qualify us to give us the long-term supply agreement. That's really what we are achieving as we speak. And the coating line, we are purchasing Western World equipments, installing it on site, and will be fully commissioned in Q1. So the phase 2, why we do that, the commercial scale. So the Matawini Flake project, 100,000 ton per annum, we'll talk about it after, fully permitted, under construction. This project will produce 100,000 ton per annum. 60% will be sent to Bécancour for further transformation, but 40% will be sold directly to customer as large and jumbo flake for other specialty and refractory market. So as you can see in our future projected EBITDA for the year 2025, that's a forward-looking statement. That's what we forecast in our feasibility study and in our internal scoping study on the transformation project. 80% of our future profitability will be thanks to the anode material, the battery material itself. All that economics, we're doing a full feasibility study, 43101, will be published in Q2 next year. So early Q2, we'll be able to publish the feasibility study to confirm those internal numbers and to be able to release it to the public and firm up our financial model. So being in Quebec, all energy intensive process like aluminum plant, we are very good at it. And we have a lot of IPs on transformation of battery materials. And we have a great partnership with Hydro-Quebec and NYSE, a lot of research center here to do this transformation. So why we choose Bécancour? So you remember we have 2 sites, one at the mining site 2 hours north of Montreal, and this one on a large industrial complex. As you see there in blue, this is our land. In green, this is our supplier of chlorine facility, All-In. All-In is the largest chloralkali supplier in the world. Now we're operating the phase 1, the purification furnaces that you saw are in the middle of their facility. And we'll use across the street a big land that we've purchased, 2 million square foot. You see here, it's the largest alumina, the second largest in North America. So it's operated by Alcoa and Rio Tinto, and they're located in the park for the cheap electricity. And they receive the bauxite, all the pet coke using a conveyor with that deep sea port. So here in Quebec, our government understood very well that graphite transformation, it's an area that Quebec will be very successful. And on top of it, 2 hours drive, we have our deposit. We don't have bauxite in Quebec, so we need to import the bauxite, and we're very competitive on the aluminum transformation. So this industrial park is an ideal location for us. And as I said the last time, actually, I had the idea of going there over 2 years ago when I was doing a trip with my family and all the coast in Galveston, Texas City, and all those areas in Texas where you realize the scale of the refineries and the oil and gas industry in Texas. So we needed to have an area here in Quebec with such infrastructure that is waiting to be used, and so to deploy massive capacity. And this industrial park is ideal for that. We can really grow as much as the market needs us to grow. So we can, take the product from our mine, but also receive flake graphite at the deep sea port there to make more transformation and be really a transformation hub. That's really what is needed. So it's another angle where you see the phase 1 at All-In's plant, and you see the our phase 2 and the phase 3 expansion. So we can go do as high as 84,000 tons per annum, not only 42. So we are already working on the growth phase, the phase 3 itself. But now we're all, in our economics, it will touch only the phase 2. And the mine site, we go back to Saint-Michel-des-Saints. There's a lot of activities as we speak. So we have now the access road is getting built. We're doing an 8-kilometer access road. We're doing all the civil works on site, and we are advancing the detail engineering for the plant itself. So it will be around 60% in the before Christmas, 60% detail engineering. So we can be ready to execute the project once we will have the project financing in place. So this is happening. So it's just a few pictures showing you the work that we do. You see the long access road to connect to the highway here to go straight to Montreal. It's 8-kilometer, so 5 miles. And here we have stripped all the industrial platform, and we're doing the civil work as we speak to start really to be ready to start pouring concrete next year when we will be fully financed to build the project. So this is right beside our deposit. You see at the end of the picture there our demonstration site that we are operating since 3 years. So over there, there's water treatments, and there's a small pit where we have extracted all the material to go in the town to be transformed in our flotation circuit. So some pictures showing you the work that is currently happening. It's live from last week, actually. And just also a quick overview of the process itself, the flotation cells, and maybe you have some lag on your connection, but otherwise that gives you an idea of the process itself and the future concentrator. So in this site, we are crushing the rock, floating it, grinding it, floating it again, and doing some attrition to refine the grinding, and then a last flotation. So three flotation circuit. That's what we do in Quebec since 30 years. There's one mine in North America, Imris Graphite and Carbon, and we were fortunate to attract a lot of the talents from that mine to be able to develop that process that we know very well now that we are producing since 3 years at a smaller scale. So what you see there is our resource. Important to note that currently we're planning 100,000 tons per annum for 26 years, but we do have double the resource. So you see 120 million tons of resource, but we're only using half of it. So meaning we can plan an expansion, the phase 3 I was talking about, at the right time. It takes time to permit the mine and to deploy an expansion strategy, 3 to 4 years, but it's important to explain that to the customer. So when you will have the first 42,000 tons per annum or 100,000 tons at the mine level, 42,000 tons of transformed product, we can expand, but you need to tell us a few years in advance. It's a mine, it's not a battery plant. So phase 1, it's fully ongoing, very exciting time for us, all in the construction mode. And phase 3 and beyond is something we start working on in the background. So we are ready to propose that to our customer. So we've last week, actually, we've commissioned our lab facility, because when you talk to the customer, you really need to have the same language. And that language is electrochemistry, characterization of material, battery stuff. So we have 7 PhDs in the team, 18 engineers. We have a relationship with the best universities and research center in North America. And now we have our own lab on site, so we can make our own cells, cycle it. We have cyclers, we have SEM microscope. we have BET, we have tap density. We can do all those measurements on site. We cannot rely always on third parties to give us that information live. So this is important, and we invested in that, and it's fully commissioned and operating now. So next 12 months, the main value driver for us, it's to land the offtake agreement. So, you know, it was a bit early in the last few years to negotiate long-term supply agreement. Pricing wasn't ideal. Now we start to see pricing getting better. One, and second, all our customers have material in hand. They have kilograms of product. They're all waiting to have more tons to fully qualify us. And once we are in this process with them, and we start to see the tension now. Before, there was only one big car maker doing EV in North America. Don't need to name them. And now there's everyone in North America. 4 big groups want to do batteries, as I said. And in Europe, it's even bigger, the competition over there. And we're still targeting Europe, but only in North America we have our handful. And everyone, you know, needs a lot of products. So now there's a healthy tension between all those groups to make the best deal for our shareholders. So biggest value driver for us is to fully commission the phase 1 2,000 ton per annum module that we're building in Q1, then negotiate the long-term supply agreement, deliver the full feasibility study to the market, so they understand the phase 2 general economics of our project, and everything will be happening before mid next year. That's really our target for delivering that, so we can fully finance the project and build and deliver the product on time for 2025 at Bécancour project. And now to do that, we're listed on New York. So we did that in the last few months, listed on the New York Stock Exchange, the symbol NMG. We were able in the last financing to attract 27 institutional investors, only 1% coming from Quebec, outside of Investissement Quebec, who participated 20% of the round. So 2 largest shareholders, the Palingers Group, Investissement Quebec, but alongside a lot of institutions that are building positions. And we have 3 firms doing research, B. Riley, Evercore, Roth, and we are expecting few more to come online, especially in the US, where the market is very interested about, you know, we're really a North American story of developing a local source of supply. So as you see, we have 86 million Canadian in bank, plenty of money to do everything that I've mentioned. In terms of milestones, we'll need to do another project financing per se for the project construction itself, to continue the project construction. So that's it. Dan would be available for question from your audience.
Okay, great presentation. Just to remind everybody, Eric came to Houston about 3 years ago and presented to our group, you know, just pretty much the resource discovery they had made and everything. And, you know, the progress that they've made on this with this company has just been incredible. So I've got some questions here that were sent in. I see one other question typed into the chat box. And if you have a question, just go to the bottom of your screen, click on the chat box, you can type it in there. But anyway, okay, let's get going with the questions. I said, so one of them I got, it was from the company's June 30th financial statement. I see that the company raised close to 96 million Canadian of equity this year. Is that enough cash to get the mine open and for the company to begin generating solid cash flow from operations?
Yeah, fair question. I would like to say yes, but the answer is no. The 2 projects, the first, we did a feasibility study in 2018, mid 2018. We did a cost estimate for the mining project. It's 250 million US at the time. Now, part of the work of our consulting firm is to update that estimate, and it will be published in Q2 next year. So the project didn't change much, but the world that we live in changed. So we need to re-estimate everything in terms of cost for the material before, you know, doing the project financing per se. So this for the mine and concentrator. And then for the second transformation to make the battery grade material, it's we did an internal scoping study earlier this year, was published 13th of March, and that's 550 million US. And this will also be updated in the feasibility study next year. So both together, you know, I have no magic ball, but you can expect around $1 billion US for both projects, including the working capital to build the project. And that will be made in the second half of next year after we've delivered the milestones, which is phase one, 2,000 ton per annum battery grade material. It's fully financed for that portion. Yes, we can generate some cash flow out of this, but that's negligible. That's not why we do this. So I wouldn't create any promise expectation on this 2,000 ton per annum profitability, but on paper we can. That's the second milestones is the feasibility study. So the full integrated feasibility study that we can publish 43101 to firm up the financial model and deliver the long-term supply agreement with an anchor customer. So we have the revenue line in our financial model firmed up. And once we have that, money is available. I mean, our government is there for 20%. In theory, we need to do the due diligence and the review and all that. That's what they did in the previous financings. We have the support of them. We have the support of our existing shareholder. We are doing export credit agency. We are doing bank debt. We are doing offtake discussion agreements that will come with some money with our large East Asian potential customer. So we are actually in discussion, but the money is not the issue. The issue is delivering a solid take-or-pay agreement on the revenue from an established tier one battery maker. That this is important.
Well, you know, I remember back in October of 2018, there was a feasibility study that said the present value of the project was close to 1 billion US. So that would include all the expenditures to get there. So whatever revenues of 3 billion or something, less the cost of the construction and then operating costs. But so with increased graphite prices, of course, you can't say what it is now, but that's the big thing, right? When you get the feasibility study and it shows that here's what all the costs are going to be in operating expenses, then that's when you can take that feasibility study plus the long-term supply contracts, and that's how you go get the rest of the money, right?
Yeah, you're right. And what we did in 2018, it was only the mine and concentrator. So we were selling flake concentrate. So concentrate of graphite, 100,000 ton per annum. There was no further value-added transformation. And as you saw in the presentation, the average value was roughly $1,500 per ton for flake, but now we are upgrading it to 7,300. So straight to battery metals. And that feasibility study will be including that part as well. The big plant in Bécancour. What is the economics of this and how much more value? So most probably it will be much higher than $1 billion altogether if you include the second transformation.
Yeah, I'm going to make a wild ass guess. It's going to be 5 billion. Sounds good. Okay, let's see. We got a couple of questions. I think we already answered the first one. Eric, you just mentioned being fully funded by next year. So do you think so by the end of 2022, this full-blown feasibility study will be done?
Yeah, no, I mean, when we talk to customer now, they are all asking, when can you provide the 42,000 ton per annum? Like they are anxious to get a product. And I'm telling them, guys, when can you give us a long-term supply agreement?
Right. Yeah.
And when can you put them out, how you say that? You know, just everyone want an electric car, but they need to commit to long-term supply agreement. They're not used to do that. The car makers, usually the tank comes empty, and the oil and gas guys like you,
we fill it,
taking care of the rest, you know. But now they need to have the tank full of minerals. Yeah. So the discussion goes quickly to that. It's like, when can you provide a material? 2.5 years after you give us a long-term supply agreement, and everyone want to understand the timeline now. They really want the product, otherwise they cannot do the battery half, you know. They need all the materials, all the separators, or all the stuff that goes in it to sell the Ford 150 and all those trucks.
Yeah,
so there's attention needed. So we believe that mid next year, like no later. I mean, otherwise they will delay their production line. Yeah.
See, that my biggest concern with the whole EV market is, I mean, just the lack of materials. I mean, I don't know if you're familiar with, but yeah, Aero Copper, a Canadian company, they hosted a webinar for us about 6 weeks ago, and they're very profitable with their copper mine. But so you got nickel, you got copper, you got graphite, you got all these materials, and then like you said in your presentation, you got if 100% of the spherical graphite is coming from China, I would think these battery makers got to be a little bit concerned about that, right?
Well, yeah, it's the revenge of miners.
Yeah, I know. They need to find local sources, that's for sure. Let's see. Let me see the ones I hit down. So feasibility study. Yeah, you said by 2023, you're looking at how many tons being produced from the mine?
2023 will be the time when we start the commissioning and we'll be in the ramp up phase. I would think 2024 is more representative of a full year.
Yeah.
We are in the feasibility study, it was like 6 months to fully ramp up the project to 100,000 ton per annum flake.
Okay.
So, but the idea now is to really synchronize both our project. We don't want to be selling flake graphite in China or disrupt the market with too big of a flake graphite capacity for the traditional market. So we want to properly time our mine to go online in 2024, early 2024, so we can build the right inventory and ramp up so we are ready for early 2025 for transformation in Bécancour. So the first full years of where we will, that's why I talk more about 2025 as a full year of representing the future profitability, So that's why I'm showing in the presentation.
Yeah. Sounds like a good plan. And I know you got a clear path to get there now. So, okay, read another question from John here. It says your stock seems to have gone in 2020 from $3 ramped up to $16 and now back to $6.50. Was part of the pullback because of the equity raise?
Yeah, most probably there was, I would say, a lot of different phenomenon. I don't know, coincidentally with the election of Mr. Biden or what, but something happened in the US at the end of the year last year and early this year. So everyone realized that EV will happen. And we went from 5,000 shareholders to 60,000 shareholders. And we were on 80 different YouTube channels at some point over Christmas and January, February, so when you have 60,000 people who want to buy exactly the same thing, for sure, all stocks of, you saw the SPACs, you saw the lithium plays, everything related to EV went very high. So that caused the upward volatility, which is great. But then at some point, we did a capital raise, yes, but you start to see even not only Nouveau Monde, but everything related to EV went a bit more, I would say, realistic and went back down. I think now we are oversold, obviously, maybe caused by the financing raise. But now what we see, it's more institutional coming in. And I did a road show last week, my first in Europe since 18 months. It was good. In Paris, and we have a lot of investors in Paris, and we see the stock this morning, it went up. So I see the institutional following will be there. The smart money is coming in the market now. We have a lot of the research analysts who came on site recently. And the thing is, these research analysts, before doing a coverage, need to see the project. They need to come online. They need to do a lot of due diligence, and it was very difficult in the last few months due to COVID. But now borders are opening. We have a visit every week on site, and I can go visit as well partners and customers and research analysts, institutional investors. So I think the market will bounce back up in the next few months, once also we deliver the milestones with the money we've raised, and we have no financing risk short term. We don't expect in the next 12 months to do financing, so especially not equity financing. So that's a plus. We see a
well,
bright.
I think for companies like yours, it's the milestones, and like you said in your last slide, you got a lot of very important milestones coming up. The biggest probably being the
Transformative milestones, yeah.
yeah, transformative milestones is going to be the updated feasibility study that's going to really show the future value of the mine. That's a big deal. I think we answered all these. Can you say what caused? Yes, actually, that volatility seemed to be in 2021. Okay. Can you finance the project without any further share dilution? Are you going to, how do you see the financing being between equity and debt?
That would be unlikely to be able to raise close to $1 billion. And I don't have this final number yet, but close to $1 billion in without any equity. So we don't know what will be the split. There's a lot of instrument available, especially that we're buying our equipment in the Western world. And there's export credit agency. We expect like many hundreds million coming there. Our government, Quebec and Canada, it's two different governments for us. They both have incentive package to offer us, and we're in discussion with them. But at the end of the day, we should have something for the equity. The equity won't be the difficult part. It will be the easy part once we have secured, like I would say, 70% of debt, ECAs, grants, and other offtakes, other form of financing.
Okay. Here's another question. Did you consider to take a stake in another graphite mining company to secure additional flake graphite for the expansion at, is it Bancor? Beaconor? Okay.
Yeah, but so for us to grow the project, because you see Bécancour is really a transformation hub. So we can receive material from anywhere on the globe. So we need to do a trade-off internally between expanding our own mining project to 200,000 tons per annum instead of 100,000 tons per annum. We need to bounce that scenario against investing or acquiring or working at GV with another graphite project, or just plainly buying flake graphite in the market coming from Africa, because there are projects in Africa. But you know, that trade-off quickly for us shows that expanding our project makes a lot of sense to enhance our profitability, but we need to keep our eyes open on opportunities in the market, because there's no major out there acquiring juniors of graphite. We will become that major, and we need to be, and what I believe will happen then is, like, no big mining companies are in graphite. It's too complicated for them. But what you start to see Rio Tinto investing in lithium. So what I believe will happen, de-risking the 2,000 ton per annum from the ore to the finished coated spherical graphite that goes in the battery, with an offtake agreement with the feasibility study. I know for a fact that the big Glencore, BHP, Rio Tinto will be quite interested. They won't, and then it will be a repeat business. We will just make a lot of this, more capital, and we will execute. That's where we will see competition coming from the bigger miners. The bigger miners will start to be interested by this, what we're doing. But now we're the only one in North America really deploying a large capacity like that, and all our competition is in China. That doesn't make sense. There will be a big major company that once we have de-risked it and it's transformed in cash at the end, there will be competition. There will be an healthy tension for our project financing, that's for sure.
Do you think there's other graphite resources in Canada to be discovered? Is more exploration potential?
Yeah, exploration potential. Yes, we discovered this one and I'm a stats guy, and I'm a math guy. Statistically, it's impossible. There's no more big deposit like that. We all barely scratch the surface, but it takes 8 years. Like we discovered in 2015, we invested all that money, 5 years of permitting, 10,000 pages with the government, so a lot of work. So you need to bounce everything when you acquire a project and you get onto the journey of putting it into production and mining. I envy you in oil and gas. It's much, it's kind of easier on oil and gas, I think.
Unless you're operating in the Gulf of Mexico and Hurricane Ida comes right over your platform, then it's not as easy. Anyway, okay. Okay, one question here is, I thought I heard Eric say that the company doesn't foresee any equity-based capital raises in the coming 12 months. Is that true?
Yeah, we don't need to do any capital raise in the upcoming 12 months, that's for sure, even more. You know, we have 86 million in the bank. However, we don't want to delay the project. So once we have made the milestones I was talking about, and we have the opportunities to do the project financing, we'll do it. If it's in 10 months, don't tell me you told me no 12 months.
Yeah, it moves fast. Right?
Once all the conditions are in place, we will execute as quick as possible, but we have all the money needed to be patient. That's important, to be patient, to wait for the right conditions to do the project financing. And there won't be a single equity financing. We don't expect it anyway to need to do any equity financing. It will be the full project financing package to be fully financed after that.
Okay. Here's an interesting statement, and then I guess a question. We live in the biggest debt bubble, and autonomous vehicles, okay, well, I guess will change the auto industry with the transport as a service business model, and a lot of OEMs will go bankrupt. Okay. What are the consideration before the signature of a long-term supply agreement besides price?
I would say besides price is the credit rating and the credibility of the off-taker. Because there's a lot of startups in batteries, and these guys didn't sell yet to the car maker. So for us, it's important that this offtake is take or pay, or at least with a credible tier 1 battery maker. And I totally agree that the world will need to change. We cannot have each of us 2 cars, 4-wheelers, 2 boats, and
Yeah,
in the world where we're going, energy cost is going high. So, and you know, we need, if we electrify 1 billion car slowly but surely in the next 30 years, I don't know, in the world, we're talking about Africa, India, that, you know, the energy growth, the energy need that is growing is just insane. It's mind-boggling how much energy we will need. So there will be growth everywhere. But if we are slowly electrifying all of this, it's 100 million tons of graphite needed. I'm talking about building 42,000 tons per annum and 100,000 tons of flake, and that's $1 billion investment. And that's the investment, but investment on the planet to get out 100 million tons of graphite, probably around 60 million tons of lithium. Getting this material out of the ground will require a lot of energy, a lot of time, and we can do it once, maybe. So we'll need to recycle, and we are involved in recycling. We want to recycle the anode material in partnership with recycling company, but I agree that it doesn't quite make sense to sharing cars make a lot of sense. Will OEM bankrupt? I don't know, but we won't, because we didn't. We need a lot of expansion for this to happen. It's either 2 digits expansion or 3-digit expansion, but it's still enough expansion for my lifetime, you know.
Well, you know, I've been in the oil and gas business for 40 years, and I've seen demand for oil-based products go from 50 million barrels a day to 100 million barrels a day. I don't know how that was possible, but I look at this EIA report on this 30-year projection, and they're thinking we're going to go from 100 million barrels a day to 125 million barrels a day of oil. And I go, where in the heck is that going to come from without unbelievable amount of money being spent on exploration? Because the U.S. shale plays, there's not a lot of remaining upside in the U.S. shale plays. I'm telling you, they're drilling out the best. The Permian Basin is the only one that really has much upside left. So, you know, they make these statements. Well, where the heck is that going to come from? I mean, 10,000 feet of water or something? I don't know, but it's going to be expensive. Okay, a couple more questions. So I'm reading that you're mining graphite flakes found in hard igneous metamorphic rocks. Is that correct?
Yeah, I would say hard metamorphic rock, highly metamorphosed. There was a a billion years ago, there was a 10-kilometer of rock on top of our deposit. So actually it used to be oil and gas that overcooked and became coal, that overcooked again for a few million of years at 3,000 degrees Celsius under 10 kilometer of pressure and 3,000 degrees Celsius. So it becomes highly graphitized carbon, so graphite. And if it was under 150 kilometer, it would be diamond, you know, in the middle of the continent, and then something like kimberlite bring it up to the surface. But us, it's like very highly metamorphosed graphite. There's no more igneous rock itself. It's all metamorphic.
In the ore that you're mining, what is the graphite concentration?
We are roughly 4.3% graphite. But the important, if you look at the rock, you look is the important thing is when you crush that, it's like glass. It's very fragile, and then the flake inside are easily liberated and they float easily at surface. And within each flake, there's no impurities because it was highly metamorphosed. So when you look at our ore, it's really easy to understand how the crushing and the flotation is very effective. And there's no magic to that. All the mine in China, most of the mine are between 3 to 5%. It's kind of sweet spot where the crushing and the grinding and the flotation works very well. If you do over 10% of graphite, often it's fine flake and the crushing is not ideal. And when you see, you take all deposit in the world, we did a study, it's an inverse correlation between grade and metallurgical result. Who knows why? So it's kind of sweet spot where the cost of production is very low. We are at $400 per ton projected cost to sell a product that is valued at $1,500 because of the flake size distribution and the purity after flotation. So, you know, so that's the right trade-off. So that's part of the success we have. And when you look the other mine in North America, they are at 6%, but they have 7-to-1 strip ratio. So they need to move 7 tons of waste rock for 1 ton of ore. We are at 1-for-1. You move 1 ton of rock for 1 ton of ore. Of waste rock for 1 ton of ore. So all those things are important when you calculate your cost per ton.
Yeah, David has a follow-on question. He says, where is the Chinese graphite mined? Do they have their own graphite mines, or are they just importing graphite and purifying it?
In lithium, it's 0% comes from China, but 60% of the the refineries for lithium is in China, but they have no lithium. But for graphite, they have 2/3 of the world graphite, and then 100% of the transformation. They are also the biggest producer of flake graphite. And it's primarily in the Heilongjiang area in China. They are older mine. And now in the last 3 years, China is a net importer of flake graphite. They have not enough. They want more. So they are importing what's coming out of Africa. Africa is the new kid in the block. There's few projects in Madagascar and Mozambique. And these guys, China is a net importer of flake now. So it's unlikely that they will selling flake now in North America is roughly 80,000 tons in the traditional market. So 80,000 tons needs to go in refractory bricks, foil for iPhones, and pencils, polymers, 5G that they need a lot of heat dissipation foil. That's a big market too. And that product is worth 1,500 tons. And now it's $1,000 just for logistics on top of it. And instead of 6-week delivery time, it's over 12 weeks delivery time. So it's not about all the cost. Sometimes it's about, they won't stop the Model X production line because they have no graphite coming in Nevada. They will just pay the price for it. So being located nearby for the traditional market is a very big advantage. And for the car maker, for the transformed material, it will be also a very, very important factor in the future. We need to build resilient value chain, supply chain in North America. Otherwise, that won't work.
Yeah, that's what I'm seeing. It's like when we talked to Aero Copper was the same way. I said, we can have these charts that show, unbelievable growth in electric vehicles, but if you don't have the materials to make them, it ain't going to happen. And that's going to take a lot of investment and a lot
It'll
of,
be empty hangar.
yeah.
Battery plants, it will be empty hangar. Yeah.
But okay, a couple more questions here. It said, which recycling company or companies are you working with?
We are working with, I would say, 4 different one. We've announced only one publicly, which is Lithium. Lithium is a private company still in Montreal, and they have a pilot plant. We've received material, and the idea for us is simple. You saw the big furnaces we're building. Purification is key. It's the expensive step in the process, and none of the recycler will invest money in purifying the graphite. They will rather prefer, because they are doing this for the cathode material. So that's where is their profit, is in the nickel, the cobalt, maybe in the lithium. But the graphite is difficult to purify after it's used. It's the graphite who's with the SCI layer, it remains at the end and in the recycling process with a lot of junk. So you need to have a very robust purification technology to bring it back to life and recondition it. So for us, it makes sense because we can easily put few crucibles at higher temperature with more chlorine, and at the end of the day, only graphite will survive. So depending on the 4 that we're working with, they not have all the same black mass at the end. We call it the black mass, what remains at the end. And we need to adjust a little bit our process, but we need to do that. As I said, we can extract 100 million tons from the ground once in the next 30 years, but not many times, so we need really to get our foot into that. And it's not an emergency for us because I'm driving my Model X since 2017. I have 250,000 kilometers, went to Texas, California, Florida. So, and it's still working perfectly. And the battery itself, it works perfectly. Not everything on the car, but the battery works perfectly, 90% of capacity still. So it will take 8 years before I will, change probably that battery. So the recycling really will start booming 2025 onward. Mm-hmm. Before that, we need to set up our plants, but the capacity won't be there yet.
Okay, we have one more question here. It says, do you see vein graphite producers in Sri Lanka and Namibia as a threat?
No, I don't see. It's in Sri Lanka, what we see the mine typically in Sri Lanka. I saw in Namibia, there's another project there. But in Sri Lanka, it's like a meter wide, 5,000 tons per annum. They mine it in block without any flotation, but that's dedicated to very specific customers. They are saying that they want to tap in the lithium-ion battery market, but when you're 5,000 to 20,000 tons per annum, you're too small to move the needle for them. You need to have a size to be meaningful and relevant. They don't want like 100 suppliers of 1,000 tons. They want 3 to 5 suppliers really for their production line. So the real competition for us is 2 things. First, China. China will be there because they are deploying capacity, synthetic graphite, natural graphite. They won't give us a free ride. So we need to differentiate ourselves from the Chinese supplier, and maybe some African project who can build capacity for transformation in North America. That's the second competition, but they need to be large size to have low cost for them as well to compete with the Chinese. It's not a quality discussion anymore with the customer. It's really the sweet spot between lot by lot consistency all the time, the same product. And there's no graphite that perform so much better than the other deposit in terms of quality that they want a lot by lot consistent product. And we can produce low cost. And we are close on graphite to the maximum theoretical limit. So it's about making it large scale. And carbon neutral is great, especially in Europe. And in Europe is essential. Like all customers in Europe they are super interested about our carbon footprint and include that in their calculation for their own production. In the US, it's more about security of supply. ESG is important. I'm not saying it's not, but in priority is more security of supply, easiness of logistic, ease of logistics, more important in the US. But yeah, so but compare with Africa and China, we have a lot of differentiator that are super important for the customer, and we'll need to.
No doubt. I mean, it's an exciting project. So we're at our hour, so I'll just leave it there. But thanks a lot. I got a couple notes here that thank you so much for letting us ask, direct questions. That's great. We're going to keep following it. I know some of the people on here are not EPG members. If you'd like to join EPG, just send an email to energyprospectus@gmail.com, and we will get back to you on how to do that. We are constantly looking for energy sector companies in all portions of it, not just, I mean, my background's all in oil and gas, but as you can see, this world's going to need a continuous growth of energy supply for people to have higher standard of living. And that's what we're all looking for. So anyway, thanks a lot, Eric. And we'll end it there. And then we will put the replay of this on our website. There'll be a link on our website only for a while.
Super.
Okay,
Thanks
thank you. Okay, bye-bye.
Thank you, everyone.